Most people are looking at the wrong number when they decide where to retire. They hear no income tax and assume that means they found a tax-friendly state. But in retirement, that can be a very expensive mistake because the wrong state can quietly cost you thousands of dollars a year in property costs, taxes, and fees that you didn't even see coming before it's too late. So in this video, I'm going to show you the 5 best and the 5 worst states for retirement taxes in 2026. So you can make your own decision with your eyes wide open and not get blindsided like so many people do. I'm not just talking about income tax. That's the easy thing that anybody can look up. We're looking at the stuff that actually affects retirees: the Social Security, IRA and 401k withdrawals, pension income, property taxes, and the broader tax environment that can either help you or slowly squeeze you. I also went through the current reporting from Kiplinger, Smart Asset, and AARP. So this isn't just some random internet opinion that people don't know what they're talking about. It's based on the latest retirement tax reporting I could find for 2026. And let me say this clearly. If you are within a few years of retirement, or you're thinking about moving, right-sizing, or relocating, this is not a small decision. This can have a major impact on your retirement. I've seen people focus on the wrong thing, move with bad assumptions, and then realize much too late that their monthly costs are nothing like what they expected, and now they're stuck. And if this starts hitting close to home for you, if you're thinking, I probably need to run my own numbers, there's a link below where you can book a call and I'll share all my information I've gathered over the 25 plus years I've been helping people. A quick disclaimer, this is not tax advice, legal advice, or investment advice. This is educational content to help you ask better questions and avoid obvious mistakes. All right, let's start with the 5 best states first. And here's how I'm ranking these: taxes on retirement income, Social Security treatment, pensions and withdrawals, property taxes, and the overall tax burden retirees actually feel. So this is not which state has one good headline. It's which state helps retirees keep more of what they've earned. Coming in at number 5, Pennsylvania. Pennsylvania is one of those states that doesn't get talked about enough in this conversation. Why? Because it's generally very friendly toward retirement income. Pensions, IRA withdrawals, and 401k income are generally not taxed for retirees. And if you do have other taxable income, Pennsylvania's flat income tax rate is relatively low at 3.07%. Now, it's not perfect. Property taxes can still sting in some areas, and inheritance taxes can matter. But if we're talking about how retirement income is treated, Pennsylvania deserves to be on the list. Number 4, Florida. Florida is still one of the most tax-friendly states for retirees on paper. No state income tax, no tax on Social Security, no tax on pensions, no tax on IRA or 401k withdrawals. This is why so many retirees keep coming back to Florida. But I want to keep this video honest and informative for you. Tax-friendly does not automatically mean low cost. Home insurance in Florida can be brutal. The hurricanes have had a really large impact on home insurance costs. Housing can still be expensive, depending on where you want to live. And don't even get me started about the ridiculous HOA fees. You all know how I feel about HOAs. HOA fees in Florida have just gone crazy, so be careful with those. And if you move there just because somebody said no income tax, you may be missing the bigger picture. Okay, number 3, Nevada. Nevada is clean, simple, easy to understand. No state income tax means no state tax on Social Security pensions, IRA withdrawals, 401k withdrawals. That kind of simplicity matters in retirement. Now, Nevada still has other taxes that can show up in your day-to-day spending, and costs can vary quite a bit depending on where you live. But if your main goal is protecting retirement income from state income tax, Nevada is one of the stronger options out there. And real quick, if you're getting any value out of these videos that I'm putting on here for you, please do me a favor, hit that like and subscribe button. We want to get this information out to as many people as possible. When you do that, that lets me know how to keep making content like this for people trying to retire smart and live happy. We want them to get every dollar they possibly can out of their retirement. Okay, number 2, Wyoming. Wyoming is one of the strongest states in the country from a retirement tax standpoint. There's no personal income tax, no tax on retirement income, there's no estate tax, there's no inheritance tax. That combination is really tough to beat. Now, lifestyle fit matters, healthcare access matters, weather matters. But purely from a tax perspective, Wyoming is very strong. And number one, the one that surprises a lot of people, is Mississippi. Kiplinger recently called Mississippi the most tax-friendly state for retirement. And when you look at the setup, you can see why. Social Security is exempt. Pensions are exempt. IRA and 401k distributions are generally exempt. Military retirement pay is exempt. And Kiplinger also pointed out that Mississippi's median property tax bill is about $1,189, which is low enough to matter in the real world. Now, does that make Mississippi the best retirement state for every person? Of course it doesn't. Lifestyle still matters. Climate still matters. Healthcare access still matters. But if the question is tax friendliness for retirees, Mississippi has a real case for being number one. So those are the 5 best. Now let's flip it, because some states may look fine at first glance and then slowly take a much bigger bite out of your retirement than people expect. Number 5 on the worst list, Minnesota. Minnesota is still one of the few states that can tax Social Security benefits. And that really matters when it comes to your retirement, because once your income gets high enough, that extra tax can hit harder than people expect, especially if you're also pulling money from retirement accounts. Minnesota may still work for some retirees, but from a pure tax friendliness standpoint, it's tougher than a lot of people realize. Number 4, Oregon. Oregon is a great example of why one tax headline can fool people. A lot of people hear no sales tax and think that means tax friendly. But then they get to the income tax side. Oregon's income tax can range from roughly 4.75 to 9.9%. And it taxes most retirement withdrawals and pension income. So yes, no sales tax sounds nice, but if your retirement income is getting taxed year after year, that can be the bigger problem. Number 3, New York. And I want to be precise here. New York is not on this list of one simple talking point. It's here because of the broader tax environment. Higher state taxes, high property taxes in many areas, and an overall cost structure that can put real pressure on retirees trying to stretch their income. So if your goal is maximizing financial breathing room in retirement, New York is a hard state to defend. Number 2, New Jersey. New Jersey is another state where you have to look at the full picture. Social Security is generally exempt, which actually helps a little bit, but the property taxes are famously high. The cost environment is heavy. And for a lot of retirees, that monthly squeeze is what really matters. So this is one of those states where retirees can look okay on paper and still feel tight every single month. So if you're considering staying in New Jersey, do the full math, not the hopeful math, the real math. And the number 1 worst state for taxes to retire to in 2026 should be no surprise to most of you, California. California is the clear number 1 pick. Why? Because California taxes pensions, it taxes the IRA and 401k withdrawals. Its income tax rates can run up from 1% all the way up to 13.3%. Now, yes, Social Security is exempt, that helps. But for retirees relying on retirement account withdrawals, pension income, or other taxable income, California can get expensive very fast. So if you love California, that's one conversation. But if we're talking purely about retirement taxes, well, California belongs at the top of the worst list. Now, here's the most important takeaway in this whole video. Do not choose a retirement state based on one headline. And do not stay in a high-cost, high-tax state just because it's familiar. The best retirement state for you is the one that gives you the best overall life, while helping you keep more of what you already earned. So yes, look at the taxes, but also look at housing, insurance, healthcare, proximity to family, weather. what kind of life you actually want to wake up to. Because retirement is not just about having enough money, it's about keeping more of it and actually enjoying the life you built. So let me know in the comments below. I'm sure I'm going to get blasted for some of these states. What state are you in right now? And do you think it belongs on the best list or the worst list? And if you're at the point where you're seriously trying to figure out whether to move, right size, or stay put, there's a link below where you can book a call and we can go over some numbers together, and I'll just give you my honest opinion from what I've seen from years and years of doing this and helping people. And again, if you get any value out of these videos, please hit that like and subscribe button. I'm here to help you retire smart and live happy. Until the next time, please stay safe, my friends.